Hey traders, in today's video we're going to be talking about drawdowns, technical analysis, and money management manipulation. Hey guys, Akil here and welcome back to another one of my Forex weekend review videos. If you guys are new, I'm a professional trader as well as a professional trading coach over at tradeempowered.com, and each and every week I try to give you a free video that will hopefully push you along your trading journey in a positive direction. As mentioned before, in today's video I want to start off by talking about drawdowns. We're going to do a little bit of technical analysis and show you something that's on my radar for tomorrow, and then at the very end of the video I'm going to share with you a rant from my live room, or not really a rant, but an example of how some traders manipulate the numbers to make their returns look better than they really are. But I want to start on the topic of drawdown mainly because, well, it was a big response that I got from my last video that I put out. And also I got a very interesting email from a trader that I've known for a while now who's experiencing a drawdown. So what I'm going to do is I'm going to start by reading you a snippet of that email, and then I'm actually going to take you inside our syndicate war room for a video that Jason Stapleton did on the very same subject. So let's get started with that email. So in the email, the trader says this. He says, "Hey Akil, I'm reaching out to you for some advice. I know you are very busy, but I don't know what to do really. I'm a former Pro Trader course student. Yeah, I know that goes a few years back. I've been consistently profitable. I've been a consistently profitable trader for around 3 years now, but I hit a severe drawdown. I've had drawdowns before lasting a month, a few times a year, and stood it out controlling my emotions. This year, the trading started out above average good, and I knew I would hit a drawdown soon, and I did almost 2 months ago. I'm down 570 pips, and I make on average 30 to 45 pips per trade. Just the last 3 weeks, I've had 22 losing trades and 5 winners, and it's been going like that for 2 months now. It's not just a drawdown. I'm bleeding to death. I'm down 14% or around, I think $11,000, he said. I'm starting to lose an investor. Just got another investor. We can skip that part. I'm a person that spreadsheets things to death to measure weak points, but at the same time, I trade very simple, only a few pattern formations. I've been back into all my spreadsheets and could never find a drawdown that has been anywhere near this one. One part of me says to dial down the position size, but then I just feel that will destroy my money management and will take me the rest of the year or so just to make back what is lost. And it goes on a little bit from there. But what I wanted to bring to your attention is that if you're struggling this year, guys, you're not the only one. I've mentioned this before in a few past videos. There's a lot of, I don't know how much of you guys listen to other professional traders out there. Not talking about news pundits or anything like that, but everyone's been saying the same thing. This has been a very difficult year, especially in the currency market. Now, I'm not the best at economics, so I'm not going to get into why exactly that is. But if you look around and you pay attention to what's going on in the world, it seems like everybody is on edge. You've got the Brexit mess, you've got interest rate hikes, you've got interest rate cuts, and it's just been an unusual movement in the market, and it has been a tough year. It's really been a year where you've had to grind it out. And if you look in front of you, there's a chart of our syndicate program equity curves. The one in black is from 2015, where we had a great year, returned about 65% between Jason Stapleton and myself. And in orange is what we've done so far this year. Now, the positive is that you see it's going in the right direction. However, it's just a lot lower. There hasn't been the same type of opportunities, especially if you're an advanced pattern formation trader only. Pattern formations just haven't performed the way that we're used to. Now, it's important when you deal with drawdowns, you got to stick with the plan. And there are checks and balances that we can go through, and the trader mentioned some of these in the email about going through the spreadsheet, evaluating your trading, even dialing back position sizes for you guys that trade CTS, maybe upping the ante for your CTS score. But the point I want to make in this video is I want you guys to know that drawdowns do occur to the best of us. And what I'm going to do here is I'm actually going to plug in the numbers from last year when we hit a drawdown right around this time. So give me a second. I'm going to load these numbers up and I'll show you what a severe drawdown may look like. So if you keep an eye on the black curve, again, that's the 2015 equity curve. I want to show you an example of what a drawdown looks like. Now, I must warn you, it's not pretty. However, it is realistic. And this is something that Jason and myself went through last year. So just watch that black curve as I plug in the numbers. We had a great run for the first, say, 20 weeks last year. And we followed that up by, well, just check it out. If I can find these numbers, here we go. Boom, boom. You can see we're just going back and forth, week after week after week. It's not all downward movement, but a drawdown is going to be the period from which you make your previous equity swing highs to your new equity swing highs. And you can see still going sideways all throughout the summer, And then finally, right here is where we smash through that previous level of resistance, make new equity highs. But you can see last year, 20 straight weeks of sideways / slightly down movement. And this is coming from two professional traders. No, we're not the top traders in the world, but we are better than your average trader. And we still suffered this type of drawdown together. So just to give you an example that, hey, it happens no matter what system, no matter what strategy you're trading, at some point you're going to suffer a drawdown. And well, what I'm going to show you next is a clip from Thursday's Syndicate War Room meeting where Jason lends his opinion on really how to deal with drawdowns and kind of the toughness and grit that you have to have if you want to be a professional trader.
And it's a psychological battle that we fight when we're not making the kind of money that we want to make. Is that you take a loss. We had 62 pip winner, 68 pip loser. Now we're back in here and we're trying. We got a pound New Zealand trade that we got to take because the rules show up and we got a really decent risk reward on it. And you're looking at, all right, I'm risking 100 pips to make close to 200, almost a 2-to-1 risk reward. And you're like, but I really don't want to lose another 100 pips. Right? We all been there. The sad thing is that most people don't even run through that thought process before they put the trade on. The most traders, they're just like, yeah, I'll sell this right here. And they don't even consider the fact that there's 100 pips of risk in there. That, yeah, you might lose another 100 pips. They don't even think about that before they put the trade on. They just go ahead and sell that thing, and then when it's 50, 60 pips later, they're going, I can't take this. What? Why? Or it gets to 50 pips or 100 pips, and they're like, I'm going to pull my stop. I'll just take this. I'll just move it up a little bit. Oh, there we go. And we'll just add another 100 pips of risk to this thing, and because it's going to turn around. Trust me. I know. It has to. It just has to. I had that conversation many a time with traders. Had that conversation many a time with myself in the past. But the people who are doing it right, and they're trying to maintain their consistency, and they're trying to do the right thing, and they're trying to trade their plan, are looking at this and going, God, I just took a 68 pip loss. Now I'm sitting here with pound New Zealand, and I got to take it. I'm going to risk another 100 pips. If they're smart, they're at least thinking about it. Because they're in every situation, they're asking themselves, all right, how bad am I going to get hurt here? How bad am I going to get? But if they've done their testing correctly, if they've done all the stuff right up until this point, they know that I got to sell it. I got to take the trade. Because if I don't take this trade, this is potentially, this will end up being the winner. This will be the one. And it'll be the one that ends up making me all the money that I had lost before, making up a huge number of the losses, And when I don't take this trade, it's going to screw everything up. And sometimes that's true, sometimes it's not. Sometimes you lose again, and you lose again after that. But the critical thing here is that if you have created that edge, if you've done your testing and historically, and you know that what you're doing has produced a profit in the past, then what you have to do is every day you got to come in and you got to trade the plan. You got to follow the plan. Because that's the only thing that's giving you an edge. That's the only thing that's going to save you. It's the only thing that's going to take you where you want to go. You start adjusting, you start making different decisions, you start, I'm going to take this one but not that one, or I really feel, I really don't want to lose any more money, so I'm just not going to risk anything. Guys, there is no reward without the risk. There just isn't. You don't make money if you don't risk, and that's true in every aspect of your life. I think entrepreneurs understand this better than anybody else, because if they don't risk money, they don't eat. If they don't go out there and hustle, if they don't put some money into advertising, if they don't print up the materials that they're going to hand to the guy to try and sell him your widget or your mattress or whatever it is that you're selling, if they don't do that, if they don't make that investment on the front end, there's no chance of any capital on the back end. Trading is the same way. You got to put your money up first. You get paid last. And that's true in business, and it's true in trading. And you've got to do the things that you know work. And unfortunately, guys, past results are not indicative of future earnings and future performance. Right? The past is not a guarantee, but it's the only measuring stick we got. I mean, what's the other option? Just wing it? I would just get in there and just throw mud against the wall, and maybe something will stick. I'll just blindly buy and sell and randomly exit and take my profits, and we'll see how we do. Trust me, that won't end well for you. So if you're thinking about this in terms of, all right, what's going to give me the best possible chance of success? Well, you go back in time, you look at stuff, you test some strategies. You say, all right, if I did this over and over and over again, would this make me some money? And 90% of the time, 90% of the stuff that you try, no, it wouldn't. You'd lose your shirt. And then the 10th time you try it, you find something that produces you a little profit. And then you say, okay, is there any way I can tweak this? Is there any way I can improve upon the performance based on this concept? And what you're looking at here in War Room is about as simple as we can make it as traders. Simple structure, support, and resistance. A very little bit of Fibonacci. We got a little RSI we look at. Very simple, very basic trading. Kind of move one step north of that, you start looking at some more complex patterns. Go one step north of that, you start looking at mechanical systems. Go one step north of that, you're talking about automated systems. This is as basic as it gets in trading. You come in here, you sit down every day, and you grind it out. And the funny thing is that if this is what you love, if you really love doing this, you love the grind. You wouldn't want to do anything else. You wouldn't want to be anywhere else. You just want to be here. And a lot of you guys are working towards that, and I cannot, I cannot impress upon you enough the importance of doing it right, of spending the time, investing the time to truly learn the skill. Because it is a skill. It can be taught. It can be learned. There's nothing here that is magical or mystical or that requires some innate ability. It's not like we're catching long bombs as a tight end where you got to run a 4.3 and you got to be able to look over your shoulder in full pads and a helmet and catch a ball in midair 50 yards down the fairway, down the field. It doesn't require that type of natural gift. It does require that you're patient. It does require that you're disciplined. And it does require that you work. And that you continue to be very introspective in terms of looking at your failures and your successes and being honest about what's working and what isn't, and constantly working. Akil said something amazing a long time ago. He said, when I was learning how to trade, he said, I started writing down all my mistakes. And he said, at the end of the month, I had identified 40 mistakes that I had made over the course of that month. And he said, my goal the next month wasn't to fix all 40 of them at once. He said, but at the end of next month, I wanted to have less than 40 mistakes. That's a guy who's playing the long game. That's a guy who's not focused on fixing his problems and making millions this week. The guy who says, I know this is going to take me time. I know that I don't know everything and that this is not a perfect scenario. I know that I don't have it all figured out. But I know when I get that number from 40 to 0, that I ought to be on the right side on the P&L chart. I ought to be making money. And any of you who've spent any time in his room know that that's exactly where he's at. That doesn't happen overnight. It doesn't happen in weeks. He's playing a long game. Are you playing a long game? Are you doing what you need to do every day? Are you treating this like a business? Are you treating it like something that you really want to do? Are you really serious about it? Because I got to tell you guys, the people that you're trading against, the other people on the other side, the people who are really successful at this, they treat it like a business. To them, it's not a joke. It's not a part-time hobby. If that's what it is to you, you're welcome to stay and you're welcome to watch. You're welcome to have fun with it. But I'm going to tell you, you're never going to make any money doing this if it's a hobby. It's got to be something that you live and breathe. And if not, and you know that ain't you, that's perfect. Go find whatever it is that you love doing and do that. Devote yourself night and day to that. Whatever it is, I don't care what it is. It can be underwater basket weaving or model trains or whatever. One thing I've found in this life is that you can make money doing anything. You just got to love it enough to dedicate every waking moment to becoming exceptional at it. And if you are if that's you, if you're saying that's me, Jason, that's what I want to do, trading. I want to trade full time. That's all I want to do. I want to become a professional at it. Then I have to believe that this is the best place for you. If I didn't, I wouldn't be here. Because this is a place where that's the way we treat trading. And so, that's all I'm going to say about it. We've got another trade, New Zealand dollar.
All right, so one thing that Jason mentioned in that clip is that you have to be willing to kind of have a short memory. You have to be willing to forget about the previous trades and focus on the next trade at hand, and really let that past trade be in the past. Don't let that affect whether you take the next trade or not. And a lot of traders get into trouble by trying to pick winners and losers, where what's important is really following your system. And we had a great example of this earlier in the week. Unfortunately, earlier in the week, I was involved in two trades, one on the pound yen, one on the pound dollar, which both blew up in my face. One was a bullish cipher formation. The other one was a bullish bat formation, if I remember correctly. And together, I took nearly 200 pips of loss. And it was pretty frustrating. Not just the fact that it was a losing trade, that happens, but these were bigger than my average loss. These losses were essentially the biggest type of loss that I can take per trade. So I knew that it would be tough to make up for that. Now, I had two options at the moment. I could have stopped trading. I could have got frustrated. Oh, pattern formations don't work this week. I'm going to just take the rest of the week off. or I can continue trading the plan. And that's exactly what I did. And fortunately, on a different pair, the euro dollar, we were able to hit back to back to back pattern formation wins. And I'll show you this. In the beginning of the week, we had our eyes set for, well, I'll show you this first. I'll go in order of how to complete it. The first thing we had was a bullish advanced cipher formation looking like this. X to A to B, B to C, C to D, and start over. X to A to B, B to C, C to D, right down here. And you can see this was a very pain-free trade. Price action nipped our entries, and we rode it straight up. We rode it straight up to another advanced pattern formation. This one's going to be called the advanced Gartley formation. And this one looks like this. We had an X up here, swing high to swing low, X to A to B right here. Let's go ahead and change the color of this. Let's make it gold. X to A to B, B to C, C to D, completing right at this 127 completion. You can see price action this morning ran a little bit past our initial entries, but we did end up rolling over for profit. And now we're setting up another potential pattern formation. This one's going to be another advanced cipher formation looking like this. And maybe by the time this video is out, you can get involved in this. X to A to B, B to C, and what we're looking for is a CD completion right down here at our 786, 111.36. Now, hopefully this completes tonight. We know that tomorrow is a non-farm payroll, so if we're not involved in the trade, all those orders are coming off because I have no intentions of gambling on that release. But we may see this filled in the Asia session, maybe in the London Open, and maybe we can get some profits on this as well. But again, the point is that we had two choices. We could have hung our heads in shame after the two big losses to start off the week, or we could keep trading the plan and find some profitable opportunities. And really, the decision that you make at that point is going to determine your success as a trader and whether you're treating your trading like a hobby or whether you're treating your trading like a business. So that's some technical analysis for you. Two more things before I let you guys go. I am going to show you a clip of a part of our live room session that we had talking about money management and kind of the false manipulation that many traders do when they're looking to sell stuff to you. We had a question that said, "Hey, Akil, how come you hear all this stuff about traders that took their account from 10,000 to 100,000 in a year?" And we actually formed a pretty good quote off of that. I said, in the reality of trading, right, you can make a massive amount of money over a long period of time, or you can blow a massive amount of money over a short period of time. It's most traders think the opposite. Most traders think you can either make a massive amount of money in a short period of time and lose a little bit over time. And that's also why 95% of traders fail. We did go into that and show you how those fraudulent numbers are created. But I did promise you that we would have a vote for my next FX Trader magazine article. I did look at all of the comments that you guys put under my last article. And I'm trying to find where I jotted down the top three choices. I hope it's on here. It may be a different notebook. Okay. Well, I think here are the three choices I want you to vote on for topics for my next article. One is going to be back testing. Two is going to be the daily trading routine, and three would be dealing with drawdowns or trading psychology, something of that sort, how to deal with losses, how to overcome hard periods in your trading. So do me a favor underneath this video, just type in what topic you would want to hear about the most. Again, dealing with drawdowns, trading psychology, stuff like that. My daily trading routine, so kind of like the day in the life of a professional trader, I guess. A lot of people wanted that. Or a little bit of talk about the importance of back testing. Now, I can't make any promises that these are going to get picked. The editor told me to shoot him a few ideas, and whichever topic they don't have covered already, they would pick. But again, I did want you guys to have some say in it, since it's you guys are the one that sent so many comments for that previous article, which had them reach out to me again. So Thank you for enjoying this week's video. If you're new, make sure you go back and watch at least 5 of my previous videos. If you watch at least 5, you get to see everything that I cover. Trading psychology, technicals, random rants. It'll give you a good idea of my trading style and my trading personality. And do me a favor, hit that like button, share it with a friend, and of course, subscribe if you're not subscribed already. Now, during the credits, I guess, I'll show you the rant, and good luck in the markets tomorrow. Take care, gang. Danny said, I don't seem to understand how some people turn 10K to 100K in about a year. It's doable, Danny. I think the majority of people you hear saying that aren't really telling the truth. But it's doable. I mean, let's say, and understand this too. Let's bring this over. We can always, this is going to explain it a lot more than anything else. It's all about position sizing. And that's also why you see people blow money a lot quicker. You can make, what do I want here? 2015 stats, because that was a full year. It's not hard to, in hindsight, to make your results look like anything. I can show you an easy example right here. This is my go-to. Really easy, right? Here's our syndicate curve from last year. So this is a full year of trading, right? Last year, no money management. Jason Stapleton and myself did about 65% return. That's between 2 traders. Me, I typically range in, what am I doing here? I typically range in like the, like 35, 40% range, somewhere around there. Between 30 and 40% is what I personally do. So this is 2 traders together. Now, 65% return, right? If we're basing that off of, what is this based off of? A $10,000 account, right? That means we took a $10,000 account to $16,000, right? Now, would you guys like to see the magic of money management and how a lot of people, a lot of traders will kind of, in hindsight, adjust it to make it show the optimal performance? This is our delta, right? This is basically the multiplier for how fast how fast we adjust our position size, up or down. Up when things are going good, down when things are going bad, right? Watch this. If I used a very aggressive delta, and I can do this because we didn't have any massive drawdowns during this year, meaning we didn't have any segments of time where we would have blown our account. And I want to preface, I would never do this. I would never trade like this in real life. Never trade like this in real life, because the number 1 rule of trading is what? What's the number 1 rule of trading? Come on. I know there's a delay. Don't go broke. And many of those traders that you see or you hear about, I took my account from 10,000 to 100,000 in a year. What do they do the next year when they hit a drawdown? Because the drawdown always comes. They blow it all. And Steven just, he just talked about blowing 16,000 of himself. But let's take this. Let's just turn this into a very aggressive delta. Let's say a 500 delta. I want you to look at this number right here, right? So keep an eye on this, because this is the return on investment. Keep an eye on that, right? 500 delta. 470% return. Woo! Oh my gosh. Traders, I just took a $10,000 account to a $56,000 account in a year. Buy my stuff. Buy my stuff and you can do the same. Guaranteed 100% return every month. See how easy it is? You can do this all day. You can make it even worse. Let's look. If I want the optimal numbers, see now this now This is a perfect example. This is where you get the reality of it. Guess what? I took my account here, right? From $10,000 all the way up to $36,000. And then what happened when I hit that drawdown? You see this drawdown at the end, right? We ended the last 3 months of our trading pretty bad. You see these numbers? This is what happens when you're trading an inflated position size. 23% loss for a week, 37% loss, 40% loss on a week versus, look at this. See the difference? 1%, 1%, 1%. Does 1% really bother anybody? No. What's 1%? It's like someone flicking you in the back of the ear. Ooh, ow, it hurt for a little bit and then you're good. 23%, 37%. That's when people do that. They take that $36,000 and then they go all the way back down to zero. Look at that. I went from 36,000 all the way back down to 11,000, back to where I started at. Why? Because I was trading an overinflated position size, which worked really, really, really good when my trading was really good during this brief period of time. And then when I hit a drawdown, I blew everything. This is what we want to avoid. This looks great, right? It looks great. But in real life, I would much rather have this. Something nice and smooth. You see, it doesn't grow that much. We only went from 10,000 to 18,000. It's not, you're not doing backflips over it. But you don't have those massive swings to the downside. You're not blowing accounts here. And that's you got to ask yourself, what do you value? A slow, steady return, like any good business, right? Any good business will value a slow, steady return over, say, 1 or 2 massive months followed by nothing or losing money. The problem is the type of traders that, many people that are attracted to this industry, they don't want to see this, right? They don't want to see that slow, steady return. They want to see this, right? They want to see that big boom straight up. Lots of money really quick. But again, that's an industry problem. And who knows if that will ever change. What we want to do is we want to filter out those type of people. And we do that by being honest. We want to say, hey, here's what it is. Here's what you could make. Here's what you could lose. And there are plenty of traders that get offended by that. There are plenty of traders that see that and they're like, for example, whenever someone asks me how much do you need to trade full time for a living, I always tell them you need at least $250,000 or at least $200,000 to trade make your full income off of trading. And so many people get offended. Oh, you can't tell me that. John Smith told me that I can start with $10,000 account and quit my job today. And we filter those people out. Those people don't take part in what we're about here. And that's good because people that think like that aren't really serious about trading. And it's not always their fault. They're just undereducated. And hopefully one day they get educated and, either they come back and work with us that way or they work with someone else and don't blow all that money in chasing that golden goose. So it stinks, man. It really stinks because you lose so many people because of that. I was fortunate enough not to, whatever. Sorry, this is getting the depressing topic a little bit, but that's how it's done. Whoever asked the original question, that's how you can that's how you can make the numbers show whatever you want. And I'll tell you what, when people are selling these systems, they'll do this. Like you see, here was our summer. Our summer last year was pretty rough, right? I think we went about 20 weeks before achieving new equity highs. This was all a drawdown. All a drawdown week by week. They'll do this, right? When they show their stats, just take that part out. Take that part out. They'll show you these numbers right in here, right? They'll show you this part of the equity curve, this part and this part, and they'll erase they'll erase what I call reality. This is the reality. This happens. This happens. This is the reality. It's the reality, guys. Trading is great. You can make money in it. But for long periods of time, trading is going to suck. It's going to stink. It's going to drive you insane. It's going to drive you crazy. It's going to make you want to quit. It's going to make you question yourself and your ability. And you've got to be able to fight through that and enjoy these times. Because guess what? If we quit right here, if we tucked our tail and ran right there, look what we missed out on. So, all right, next topic. This always gets me fired up doing this type of stuff because it, you see it all the time, and there's nothing you can do about it. Yep. Sorry. I'm sure a lot of you enjoyed that, but sorry. Now, I would say this on the positive side. Money management is what allows you, we talk about the negative side of it. It's also what allows you to be, if you're consistent in your trading, meaning if you don't have really big drawdowns, if you're consistent in what you return, that's how you really start to make the money. You don't make more money in trading by doing something different. You don't have to find more opportunities or get more aggressive. You can, sometimes that can help. But you just need to keep doing what you're doing and just let the money management work for itself. Do the same thing with more money, essentially. Phil says, even with a good trading plan, you are only looking to have 4 to 6 profitable trades out of every 10. That's what Peter Brandt, he's a trader I look up to. He's made his career off of being a 40% trader, I think. And he's one of the best traders of our time. And he openly says, hey, I'm a 40% trader. Every time I enter a trade, I assume it's going to be a loss just because I lose more than 50% of the time. And that's another topic. People that get caught up on win percentage. Everyone has this big thing about win percentage and how glorious it is. Beat their chest over being a 90% trader. Who cares about win percentage? It's about profitability, expectancy. There are traders out there at 30% that are racking in a lot more money than those 90% traders. But that doesn't sell, right? Hey guys, want me to teach you how to win 3 out of every 10 trades? Buy my stuff. Win 3, lose 7. Buy my course, 30%. You can lose more than you can win. Sign up now. Would you guys buy that from me, right? Jeff, are you winning too much? Are you winning 60% of the time? I will show you how to win 30%. I will cut your wins in half. Buy my course. Right? That's actually kind of funny. We should do a video like that. That's actually kind of funny. It doesn't sell. It doesn't sell. And this is coming from someone, guys. I'm in the education business. I get hammered on YouTube all the time that says, "Oh man, this guy is just trying to sell you something." Yes, I'm trying to sell you something. Only if you want to buy it. The difference is I'm not lying to you about what you're going to get. That's where you can't sleep at night. If I'm trying to sell you something and I'm pushing these false dreams down your face, that's when you get into trouble. Yes, I'm offering services. That's how I make some supplemental income. Yes. But I'm telling you the truth. I'm not force feeding it to you. Oh, that was good. The 30% trader. Steven says, it seems like a drawdown is inevitable. Yeah, every system, every strategy is going to go through a drawdown at some point, Steven. What happens is, here's the thing that happens to a lot of traders. a lot of traders, because they can't stomach the drawdown, that's when they quit their system. So they can have a perfectly good system, but instead of fighting through the drawdown and living to reach new equity highs, they quit their system when the drawdown happens, and they bounce to the next system. Then they trade that system for a little bit, and then when that system goes through a drawdown, they quit that one and they run from it.